Good afternoon. Stop talking to me now. I'm mad at you. I'm so mad at you. Good afternoon, everybody, and welcome to our YouTube channel. My name is Glenn Tompkins, Senior Instructor here at VectorVest. Always glad to be here on Trending Thursday, the best day of the week. Huh? I know. It's the best. Trying to see if the alert that you sent goes out. Doesn't seem to be happening yet, but that's all right. Sigh. Say hi, Joey.
Hi, Joey.
Joey's my producer extraordinaire. If you can hear me, by all means, please respond in the affirmative, letting me know that you are hearing me loud and clear, preferably with VV Nation, and where you're tuning in from. Love the way we got this started today, Joey. Holy smokes. Glad to have you all here. And we're going to have a great day. I've got a guest. He's going to be appearing a little later, because he's still doing something right now. And when he does, we're going to look at stocks a little different way, just a little bit, to give you some insight on what we do here. There we go. I just got it. Just got the link. There it is.
What's it say?
No, you don't need to see it. You should see it on your phone. Why are you looking at my phone? All right, so.
I never got it before.
You never got it before? Energy, howdy. How you doing? Rogers coming in from Arizona. We got Washington. You know what we found out? We found out that we're due to get 8 to 10 inches worth of snow here in North Carolina. 8 to 10. 8 to 10. Joey's saying no. Joey says he's going to go to the store to get his bread and milk so he can have some milk sandwiches while we have all this 8 to 10 inches of snow. Little changes, first sentence. Okay. Can you let her know? Oh, Angie, that was on my email. I won't be able to get back to her right now. Dang it. I'm going to say yes. I'm just going to say yes. Reply yes, because she needs to get this out. She needs to get this out. All right. So I love that we have so many people from Canada here as well. All right. So better you than me. I know 8 to 12 inches. 8 to 12. It's going to be a lot. All right. So what do we do here on Trending Thursday? We talk about the sectors. I love looking at the sectors that are trending, even when the market may be going down. Sometimes when that happens, I will point us more in the direction of things to look at from a defensive perspective, preferably contra ETFs. Not everybody out here likes to short stocks or play options, and if that's the case, I think a great way to take advantage from a defensive perspective of the market is always going to be contra ETFs. So when the market gets to that level, on a Trending Thursday, we'll probably spend more time looking at contra ETFs than anything else. But we're gonna keep our eyes on what's going on in the market right now, definitely. Bob says, great skiing. I'm not skiing. We can ski. We go to the mountains to ski, right? We got skiing up here, so I don't want to go skiing. Going well. That Tom is here. I'm glad to see you're here, Tom. Going well. I guess that's supposed to be Joey. Joey, we finally have the path to the out. Really? You put that up there? The path to the outhouse? I wasn't putting it up there. Oh, my gosh. You just putting up. Asheville. Asheville is a good place to go skiing. That's for sure. Why don't you consider high dividend, low volatility ETFs? We can do that. ETFs can come in the way of contras. But you know something? If the market is really going down, I can do dividend, but you got to understand that even from a dividend perspective in a downtrending market, does the dividend outweigh the price depreciation? Because even though you can be in great dividend paying stocks in a downward trending market, what if the stock goes down 8, 10, 20%? Is the dividend you're receiving outpacing the downcline in the stock? So, Imanu, I hear you on that, but that's always my bone of contention, trying to play those ETFs even in a downtrending market. So that's my opinion when it goes to that. If that's the case, then might as well play a contra or do an option. I might as well play the option at that point. You're going to get more money rather than trying to level out between the price depreciation and the dividend received. All right, so I hear you, Emmanuel. I'm just giving you my insight on it. I'd rather go a different direction. I'd rather go with the contra ETFs at that point. All right. So with that being said, best dividend advice in a down market yet? Thanks, Glenn. Listen, that's my opinion. That's my opinion. You got to understand the market's direction affects about 80% of the stocks in the market. All right. And when that happens, 80% of the stocks in the market are going to be going down big. And I don't always feel that the price decline, that the dividend outweighs the price decline. All right. Good day to all. Keep good info and tips coming. You got it, Arson. So this is what we're going to do. Let's start talking about what's going on in the market. Why? Because the Fed is the biggest contributor to what's going on in the market. And the Fed's job is to look after three things: interest, inflation, and the jobs market. That's their goal, to keep those things in check. So let's start off by looking at the stories that I have on what the Fed is doing or what the market is doing. There we go. And where's my mouse? My Stream Deck doesn't have, it does. We'll do it that way. Why don't I just use my Stream Deck? All right, so let's start talking about jobs. Today, the jobless claims rose to the highest since mid-November. That means more and more people are looking for jobs. And there's a lot of jobs out there, and I've got a little bit of insight. I told the people in the Jockey Club today we're going to spend a little time on a conversation about what's going on with jobs and why we have the problem with the jobs market that we have right now. So jobless claims rose. They were supposed to come in at about 200,000 jobless claims. It went up to 230,000. That means more and more people are looking for jobs. And it's not like the jobs are not out there. So that's one aspect of the Fed. The other aspect of the Fed is inflation. U.S. inflation hit 7% in December, fastest pace since 1982. Inflation is an issue. Even when the Fed was talking about inflation was transitory, what did I say? Your Uncle Glenn was telling you that transitory was not the right word. As time went along, they realized that and they stopped using the word transitory. What else is going on from that perspective? Economy's fate might hinge on the question of full employment. Full employment. So if people are looking for jobs and jobs are out there, why can't we get to full employment? This is why we can't get to full employment. A lot of people, there's two reasons why. Why? Because people want a wage that will help them to keep up with inflation running the way it is. They need a job that's going to keep them going, keep it up with inflation. So people are looking for a higher wage. I don't think that that's wrong. But nonetheless, you need to have a job to sustain yourself. You really, really do. Why are there so many people not coming back to the job market? And this story hits the nail on the head. Hits the nail on the head right here. New small business applications hit record numbers in 2021, expected to continue in 2022. People are wanting to not work for somebody else and to work for themselves. I think that with COVID and people having to stay home and with people having to work virtually, people are looking to do their own thing. Side hustle, side gig, on top of what they're doing right now for who they're working for. Small businesses, entrepreneurship has grown exponentially. And I think that that's a reason why a lot of people are not going back to the job market. Now, I looked at this here. Small business startups continue to surge past pre-pandemic levels. 3 million in 2016, 3.2 in 2017, 2018 and 19, 3.5 million. During COVID, which was 2020, it went from 3.5 million to 4.4 million. And now, after COVID, after people were starting to work at home, 5+ million in 2021, and they're thinking that the number will continue to go higher. More and more people want to work for themselves. Industries highly affected by the pandemic showed the largest gains in new business applications, according to the data. Retail trade applications grew 74% in 2021 as compared to the pre-pandemic numbers of in 2019. Many small business retailers are going digital, and that's another thing. People are moving from the in-person levels of retail to digital. Think about it. Patrick talks a lot about GME, talking about GameStop, and even they are turning more to a digital format. So, folks, there's a lot entailed in the whole idea of why the jobs people are not working. Everyone can't be an influencer. It takes really hard work. That's Adam. Craig says working from home means I can get up early to watch Glenn live. You know what else? Why people are working from home? Because childcare is so expensive. How many days are your kids home now, Joey? Sometimes they are, most times they're not now, right?
Yeah, every day they're in school.
All right, but when they are at home, that causes either you to pay for childcare, which is way expensive, or one of the parents need to stay home to watch the kids. That's another reason why people are doing the virtual thing. And you know what else can happen from the virtual thing? You can do more work virtually and work for more different people virtually than having to report to 3 different jobs. You can do 3 different jobs virtually. And so this puts a little bit more perspective in my mind as to what's going on in the job market and why it's such a hard deal to get people back to work. This to me is again like 1980 before Reagan. Lou says bartering was why. There you go. Back in the way back days, it wasn't digital virtual stuff. It was actual bartering. I'll do this for you if you hook me up with this. That was the way back in the day, Lou. And now, because this is a different time period, it's now all virtual. Bottom line is hard work. That's it. You know this, Glenn. Listen, the work ethic may have changed as well. Just because people are doing things virtually, does that mean that they're not doing hard work, Adam? So take that into consideration. It may be a virtual world right now, but that doesn't mean that people aren't still working hard. I don't want to disprove that. I don't want to take that away. Joey works a lot from home. He does a lot more work from home than he does here. Why? Because he's up at late in the night doing it where he wouldn't be doing that if he were here. So just think about that. I don't think that just because it's more of a virtual place that people are not working hard.
I live at work.
He does live at work. Mike says, very interesting statistic about new business startup. Thank you, Glenn. I think that today was a great opportunity to put more thought into why the job numbers look the way that they do. And I think that this was a cool thing. Adam says, a real Fed's fund rate is 5 to 6. That's where we are heading. Correct, spot on with bartering. And I think, and again, I don't think it's bartering now. It's not that it's bartering. It's the virtual world where you can do and work for more people at the same time, number one. And number two, start up your own business virtually can do the same thing. Ninja says, Glenn, you are right. Makes it easier to work an 80-plus hour week and have a much better equipment, monitor, printer, no coffee clutch, waste time. And you know, think about it. And I'm looking at Joey. Joey can text me something at 0:30 in the morning. I won't get back to him until the next day. But it tells me he's still working, where if he were here, he wouldn't be doing that. I think that employees are realizing that a lot of people are getting a lot more work done virtually than when they are in the office. So I'm just saying, I'm putting all that. It has, Glenn. It is how you were raised. I'm stuck in the past, but everybody wants everything immediately. That's not how it works. I get you, Glenn. I'll respect it. And I got that. I'm cool with that, Adam. I'm cool. I still think that, you know, even when you're working virtually, you can still be working hard virtually. All right. So with that was my stories on what was going on in the market from a jobs perspective. We all know from an interest perspective, interest rates are going to go up. Looks like the end of the first quarter. And the jobs keep going back and forth, depending on what's going on for that week. But I'm thinking that this story is right, that the record numbers in small businesses will increase. More and more people do want to either work for themselves or work, and even if they're working virtually, they may not be on the rolls for looking for a job, but they're independent contractors now. I'm wondering what the rate of the 1099 forms are. I wonder if they're going up exponentially. That would be very interesting. I'm wondering if they're going up exponentially. That's going to back up this story. I'm probably going to think about doing that for next Thursday to see if I can find a story on the rates of 1099s that are being issued. That may be interesting. Ted says, as a contractor, I love people working from home. I hear that. That's awesome. Adam says, you're right, spot on. You're the man. Fantastic. I'm holding CVE. I pray small business flourishes. We'll try to take a look at some stocks today. All right, so let's go look at in the system what VectorVest has to say about. Let's go to the viewers. I was in the viewers. Let's go to the watch list viewer. Let's go see what my two stocks that I look at for the market, the VVC and the SPY, where they are. Today we got 27 stocks. Hush up, Joey. I don't want to hear your mouth. Let's go see where the VVC sits. Look at where that is. Way down the bottom of the list. And where's the SPY? Towards the bottom of the list as well. So the indicators that we use for tracking the market are way down there. Ninja says, not just 1099, also people like me. I'm a chapter C and others might be chapter S. So I really I'm going to look at all of those things. 1099s, chapter C, and chapter S. I want to look at where all of those things are. That's still going to give more perspective of what's going on in the job market. All right, let's go take a look at these two indicators. View the stock graph. Let's bring that over. And let's go put this on a 3-month graph. This is the market, folks. All right, looking at the S&P 500, I've got a trend line. And even with the market doing what it's doing right now, this is a 3-month graph. This is a 3-month graph. Let me go put on. There we go. Ooh, my picture went away. Did you break it? Okay. You broke it. Whatever. You broke it, and now you're going to blame me. Anyway, I've got a trend line. The S&P, no matter what, even on these pullbacks, is definitely moving from the bottom left to the top right. We're above the trend line. I've got a 20-day exponential moving average. Today's activity brings us below the 20-day exponential moving average. It is a 20. Make sure. Yep, it's a 20 EMA, but we're still above the trend line. All right, and the market, the S&P is still moving higher from the bottom left to the top right. We're still in an uptrend. Recently, we just did Patrick just did a video on the YouTube channel talking about a possible bullish divergence, but he also talked about overall, even in VectorVest, we are still in a bull market right now. We're still in a bull market. We don't get knee-jerk reactionary when these things happen. When these things happen and what's going on right now, the market still is in a bull market. Now, this is on the S&P looking at 500 stocks. This is on the VVC, though, that's looking at over 9,000 stocks and gives a better perspective of the big view of the market. What's the market sitting in right now? A little bit of a channel. On the VectorVest composite, which is trading at 66.10, right now I've got a level of support at 65.28 and a level of resistance at 68.52. Over the last few days, as the market's gone down, as we've gotten a primary wave down, look at that. We're below the 20-day exponential moving average, but we are still trading above the level of 65.28, which is a solid level of support right now. Zone, touch, zone, beautiful level of support. I'm also looking at the earnings per share and the earnings growth rate. Earnings growth rate is starting to drop a little bit, but earnings per share, our forecasted earnings per share is still on par with what it's been looking like for the last 3 months. So earnings overall are still going higher. We're about to hit big earnings tomorrow. Banks start reporting for Q1 tomorrow, so you keep your eyes on that. I think JP Morgan, Citibank, a couple of other banks, and normally that sets the trend for the year. So we'll keep our eyes on that. We will keep our eyes on that, but I want you guys to know that as well. Banks will set off or start off on Q1 for this year. So these are the two things that I look at for the market. Down day today, we are sitting still above a level of support. And on the S&P, we're not only sitting above a trend line of support, but we are round about that 20-day exponential moving average as well. So that's what's going on in the market. Now we know what's going on with interest rates. We know they're going to rise in March. We also know what's going on with inflation. The rising of interest rates was hopefully bring back or pull back on inflation. And now we've got a better perspective on the jobs and what's truly going on. And I don't know if anybody else on YouTube has approached this idea of what's going on with the jobs the way that I just did. And if they did, that's great. But if not, you've been introduced to another way of trying to understand what's going on with the jobs number. All right. Could you please express the VVC drop in brief earnings per share? When I'm looking at that, who is that? Jeff. Anything can happen to make that. Keep in mind that our earnings per share is forecasted. I keep that in mind. And anything can happen along the line with the group of over 9,000 stocks. It didn't pop up. Is he ready?
Yeah.
Oh, he is ready. So
I need to get ready.
all right, so that's fine. I'm going to go on to a different story. We did see the drop. Oh, that's on the S&P. That's why. What happened? Something happened here. I don't have a full answer except for the market pulled back a little bit, which could have affected the earnings across the board with a lot of the different stocks, especially because our earnings are forecasted. Stocks falling down that heavy, that fast could definitely move our forecasted earnings number. All right, so that's the way it's going. All right, couple of things. If you haven't already, subscribe to the channel. Hit the subscribe button. All right, hit the bell icon so that you'll be alerted to when new videos like this come out. If you haven't already, if you like what you see right here today, folks, hit the like button. Let us know. I love the conversation that we had today. I think it was needed because I keep seeing all of the information in regards to the earnings number. I always see, I really am having a hard time wrapping my head around it. But looking at that story, and actually I got that story from Todd. Todd Schaefer, we talk about a lot of things every day. He sent me that story, and we talked a little bit about it, and it made sense. And hopefully it made sense for you guys today with a better understanding of what's going on in the jobs market and how it's affecting the major indices as we see it. All right. The last time the BBIG squeeze, it went from $3 to $10 in 2 straight days. It's going to rip tomorrow with everyone sharing it. I don't know. Today, I think I'm probably going to start to look at some of your stocks. So at the end of the session, we're going to look at about 20 of your stocks out there. When I ask for them, Leonard, you can put BBIG up. I'm not going to look at them now, but I will give you an opportunity towards the end of today's presentation to do that. All right. So, I know you're getting ready, but I need.
Yeah, I'm pretty close.
All right. As I continue talking, Joey's in the background getting my guest ready.
You need your stories?
I need to get to my next story.
All right, we'll use your button.
All right. So we go to there. And I'm going to skip over the next story because I need that one from my guest. Next one I'm going to talk about is steel. Steel stocks, the steel sector is up over 17% in the last 2 weeks. Glenn, don't forget to mention your videos on investing for beginners, which are free on YouTube. You know something, those are out there for the people who come across the channel. My video, that whole segment on investing for beginners is out there for people who are new to the market and who want to get their family members or friends more acclimated to what the market is all about. That's what that's for. I don't usually talk a lot about it, but thank you, Ninja. I appreciate that. They're out there in our playlist. We do a lot of work on our YouTube channel besides just Trending Thursday or Midday Market or the mobile app, which Patrick did today. We also do a lot of daily videos. I will have a video out tomorrow, which will be put out about 6 p.m. It's going to be on Metaverse stocks. I'm going to talk a little bit about Metaverse stocks today, but I'm going to do a deeper video on it tomorrow at 6 p.m. Folks, go to it, share it. Let people know about how we're looking at the Metaverse. The Metaverse, I still think it's in its infancy, but we'll talk a little bit more about that in a second. So this is on steel stocks. Only one story on steel stocks. Should you accumulate Nucor Corporation, NUE? That's a stock that a lot of people know about, and it's rocking and rolling. So should you accumulate Nucor? We're going to take a look at analyzing the stock, and we're going to look at some of the other peer stocks that are in that space as well. So let me get back into the software. And Nucor is the story, right? And so let's go see where the steel stocks sit. Remember, I got 27 stocks, and these are sorted by our master indicator, VST. So the stock that has the stocks that have the best combination of value, safety, timing will come up to the top of the list. So whether I'm looking at 2 stocks for Trending Thursday or 27 stocks, they're automatically sorted. So I got 4 stocks. I've got in this deal space. I've got Nucor. I've got MT. Ooh, look at that. I've got TX, and I've got ATI. So notice automatically, even though this sector is up 17% over the last 2 weeks, look at where some of these stocks sit. So not only is the industry or the sector moving, I'm putting you into some of the best stocks within that sector to look at. How do I access the swing trading sessions? I would go to support, but the weight was 20 deep. The swing trading sessions, if it was a webcast, if you go to our website or go to the VectorVest software, we have a link to all of the webcasts that are coming up for the week. But if you're looking to get into that course, that's a whole different thing. Jay is going over to the swing trade coaching. That is something that you pay for. If you're talking about the webcast, that's a different story. Those are free, but the coaching sessions are paid for. All right, so here's my 4 stocks. Let's view them. Nucor was the only one that had the story, but let's go. And there's Nucor. Put on a 3-month graph. Wow. So Nucor in a space that's moving up, I can see right now that it's a little bit of a sideways move on the stock, number 1. Number 2, I do like earnings per share and I do like earnings growth. I've got a stop price. I got a 20-day exponential moving average. I like the stock, but it may not be the right time to be in it. All right. Where's my next one? Let's go down. Wow. Look at that. ArcelorMittal. Is that like French? ArcelorMittal. Je ne veux pas. Parlez-vous français? Comment allez-vous? That's my French accent. French fries, French doors, French kiss. All right. But look at that. Look at that 20-day exponential moving average. Look at the price movement. Look at the volume. Look at the earnings. Look at the earnings growth rate in a space where Nucor is a stock that a lot of people are talking about. Maybe you just found another candidate that's rocking and rolling. You know, give me the Beat Boys and free my soul. You know what this looks like? This looks like an airplane taking off. Look at that. That looks like an airplane taking off and rocking and rolling. That's the beautiful thing about looking at a hot space, but looking at the other stocks in that space, you can always find stuff like this. Going into TX, Ternium, I love the earnings. I love the earnings growth. The stock is above the 20-day, bouncing off a level of support at 44.75. I'd like to see it take out its most recent 3-month high. Down day today, wouldn't take it today, but if I'm in it, I'm not panicking because it's still above the 20-day exponential moving average. Let's go to the next one. Good, googly moogly, ATI. Look at that Allegheny. That is a great-looking stock, nicely rising above the 20-day. Beautiful up day today. Earnings growth rate look good. Volume looks pretty good, pretty steady. I like that. That's what you're looking for. Recently broke through a level of resistance. So again, Nucor is the stock that's hot in that sector. But now when we look at the other peer stocks that are in it, I've got a couple of other stocks that I can definitely keep my eyes on. Folks, if you thought that was valuable, hit the like button, number 1. Number 2, let me know in the chat, is this useful information to you in regards to looking at trending stocks to keep your eyes on? Type a 1 in the room, and if you can do better than this on your own, type a 2 in the room. All right, I want to hear. Type a 1 if this is useful, practical application information that you can use right now. And if you're okay and you feel like you can do better, type a 2 in the room. And you know something? If you type a 2 in the room, I'm okay with that. I'm not hating because everybody invests differently. All right. And again, don't forget to hit the like button. Forget. All right. So with that, let's close out of that one. I'm going to go to my next story. And after I get into my next story, I'm going to bring up my wonderful guest as well. Where is, I passed it. There we go. So this was the industry that was up the most, the sector that was up the most over the last 2 weeks. And this is petroleum stocks. Petroleum stocks, and it was up over 41% in the last 2 weeks. I did a Delta RT, a Delta search by RT over the last 2 weeks on sectors, and the petroleum sector is up over 41%. So I said to myself, man, I got to talk about that. This is Trending Thursday. We want to talk about what's trending. So this was the only story I saw that I want to look at it. ConocoPhillips versus ExxonMobil in the petroleum space. But I got other stocks that fit that space as well. So we're going to go look at ConocoPhillips. Look at where it sits in my list of 27 stocks. We're going to look at XOM. There's Exxon. All right. We're going to look at MDR, which is not MTDR. MDR. Where's that at? Dang nabbit. Do I not have MDR in here? How did I lose MDR? And DVN. Where's DVN? And I need to add MDR. I thought that was in there. Why is somebody calling me right now? MDR. MDR. Oops. I don't know how that didn't make it. That's all right. No, maybe that wasn't it. Then maybe I'm only looking at these three stocks. I don't know where I must have put the wrong ticker symbol. But anyway, the story was about ConocoPhillips and Exxon, and I also got Devon Energy. Let's right-click, view the stock graph. So now this is what we'll do. This was the hottest sector, and I'm going to bring in my good friend, Todd Schaefer. Now, why am I bringing in Todd? Because since this was the hottest sector, I wanted to have him look at stocks the way he does in the Successful Investor course. There's certain things that he looks for, and if the sector was that hot, I wanted his take on how to best play these stocks, and this is specifically for the people who may be new to the VectorVest software or who need a little bit more firm foundation on what to look for when you're buying a stock. So again, the fastest sector over the last 2 weeks, my good friend Todd is going to show you what to look for as trading in the Successful Investor course that he's a coach of. So Todd, hi man, how you doing?
Hey, good. Sorry I'm late.
Are you muted?
Maybe I am.
Yeah, now you're not
by
muted.
me.
All right, now I can hear you.
Okay.
Welcome, my friend.
Well, glad to be with you. Even though I had to be a little late, I apologize for that, but I'm sure we can carry on.
I think so. Carry on, my wayward friend.
All right, so it's interesting, COP, that was my pick from yesterday, or one of my picks from yesterday, so I can't say that I don't like the stock, right? And now you're muted for me.
No, I can hear you.
Oh, okay. So
Okay.
maybe
I just was very quiet.
Here. Standing by, hang on a sec.
Okay.
Well, I'll work with the delay because I think we got a little tech issue in the background. I don't know if Joey can rescue us from ourselves or not. But one of the things I wanted to talk about here when we talk about successful investor is kind of why does successful investor even exist? Particularly people who are new to the VectorVest product, for want of a better term, or service. One of the things that makes it difficult to invest and or trade is that you can invest and or trade, right? So your objective in the trade, your objective for even taking the trade defines how you would take that trade. So I'm going to try to simplify here as best I can, but if I'm investing in ConocoPhillips, I'm going to have a different approach, a different set of rules than I would if I was swing trading ConocoPhillips or day trading ConocoPhillips. And of course, there are variations on all those themes. I could be swing trading, but that means a lot of different things to a lot of different people. What we found in our coaching, we've been doing this for over 30 years. What we find with a lot of folks, no matter what their objective is for being in that trade, they may have missed some of the fundamentals of trading. And so successful investor in particular takes the approach of, well, let's slow it down. Let's back up and take a more position trade to investing perspective on these stocks. And let's develop a trading system to make sure everybody kind of has their basic fundamentals in line of how to read a price chart, how to apply a stop loss. In the program, you have on the training tab the quick start guide, which is kind of our abbreviated version of the Successful Investor. That was kind of the core foundation of the Successful Investor course. And we developed the course because we came to recognize the need on behalf of our clients of filling in the details of these trading system rules. For instance, let's say we're going to trade the VectorVest stop price as our stop loss. Well, the follow-up questions were, okay, on an end of day basis or an intraday basis, where do I place the order with the brokerage? Do I place the order with the brokerage, right? So all these follow-on questions, the details, the specifics of how to actually implement the rule. Well, that quick start course, it's about 15 minutes per session, 90 minutes total, doesn't go anywhere near enough detail to answer those questions. So we developed the full course, which is the Successful Investor course, the full course, where we take each of those topics and spend an hour to an hour and a half on them with mastery sessions and coaching to expand and really answer those questions in detail. Some people need that detail, some people don't. But we really saw a need in our subscriber base to learn those basics, those fundamentals. Beyond just entries and exits of the trades themselves, the question of, okay, I'm going to buy the stock, but how am I going to buy the stock is just as important as what stock am I going to buy? How many shares are you actually going to buy? Where are you setting your stop initially when you take the trade? How many stocks are you going to trade in your portfolio? How do you diversify risk over industries and sectors and position sizing, etc.? So there are a lot of moving pieces to successfully investing. And we thought, let's establish those conditions for those who are struggling to find success. The neat thing is, once you understand those fundamentals, kind of, I could say at a walk, right, where we're at the investor pace, all of those conditions are still present if you go into something of a faster time frame. In other words, it's fractal. It works across all time frames. So the same criteria are required in a swing trading approach and a day trading approach. You just change the time frame, but you still have to manage risk. You still have to correctly position size, right? All of those basic fundamentals of any trading are consistent, and they're consistent whether you're looking at weekly bars or daily or 5-minute, right? So it's fractal across all those time frames. So that's what we're doing in the Successful Investor course. So what I thought would be helpful today is let's look at how we would take this Successful Investor approach to stocks you've been talking about today. One of the things that we say is no matter what source you use to find your stock leads, you still want to come back to the VectorVest system and analyze the stock. So there's kind of two levels. The first level is just in the stock viewer. So Glenn started in the stock viewer. Let's jump back there and let's look at ConocoPhillips. I could have done it on the watch list, I suppose, too, but that's okay.
It's already in my watch list.
I know.
You want to be there?
Yeah, let's just start here.
Okay.
Right, so I can do a quick thumbnail analysis here. It's priced at 84, valued at 112. Underpriced, so that's favorable. Good upside potential with RV at 1.6. Average safety, right, at 0.98. 200's off of 1, so we'll call that average, but it's in a nice, strong upward price trend. Currently buy rated in the VectorVest system. They're earning money, so they're profitable, and they're growing those earnings on a 40% annual basis. And by the way, if you scroll over to the right, we have dividend information, so it is yielding just under 1% on its dividend yield. But I like to scroll over, and particularly in this current economic environment, I like to make sure I have companies that are still growing their top line, right? Because that'll be one of the first places to falter in a soft economy. So their sales growth number at 171%. Okay, yeah, I'd say it's positive, right? So on a quick thumbnail analysis basis of this stock, I like the numbers. What if I didn't like the numbers? Well, go fish. Right? Why are you going to try to force the square peg into the round hole? Just go find somebody else. So let's do this. Let's go back to your watch list, and to find someone else might have been the other 3 candidates in the list. Right? They were all in the oil patch.
I have them in a graph.
Oh, look at you. All right, so we're going to change the graph setup here a little bit. So in the layouts, if you go to graph layouts, there's a layout called VectorVest Simple. So VectorVest Simple is the approach Dr. DeLito developed in looking at stock graphs to find candidates. So on our first, I call it the first pass graph, let's just do price and earnings. Because remember now, we're taking a more investor approach toward analyzing the stock. I'm trying to hold on a position or a longer term basis, right? This weeks to months or years if I can do it. So we're going to start with a 1-year time frame, looking particularly at price and earnings. And I want to see price going bottom left to upper right, the smoother the better, driven by an earnings performance that's going bottom left to upper right, smoother the better. Those rising earnings driving the higher valuation of the company and the higher price. So compare that to DVN. And right away, the first thing my eye tells me is that price pattern is much more steadily rising on DVN than it was on the first candidate. Earnings forecasts pulling back a little bit at the hard right edge, but still stable, not in downtrend. Who's next? COP. Price action, not as smooth as DVN, right? But the earnings performance is certainly acceptable. And who's last? XOM. So again, price action higher on a year-over-year basis, but it hasn't been steadily trending as much. Earnings are softening up a little bit more relative to the others. But that's my first pass. I can eliminate from consideration anybody who's got too much volatility, trapped in a sideways move, that kind of thing. The next piece I would do after that in this charting analysis.
Oh, you want the charts back?
Yeah, I do.
Okay.
Unless you want to show me something that.
Nope.
Okay.
Okay.
That was a 1-year perspective. And I should add one other thing. Let's add support and resistance to this graph, Glenn. Because I also want to avoid entering stocks that are coming right up to resistance, like MTDR, right? It's right at resistance, so I'm not going to buy it until it breaks through that. So DVN is clear. COP is clear. XOM is clear. Notice how fast the price on XOM is appreciating right off the bat. My eye goes, wow, that's a rocket ship taking off, right? So we call that a parabolic price move, and we avoid parabolic price moves and gapping price action because they often retrace back to the mean. So if it goes up like a rocket, rockets also tend to just come straight back down, and I'd want to avoid that volatility on an investment. On a trade, I'm going to have a tighter stop, so it's not as important. But on an investment, I'm going to have a wider stop loss, in this case, typically the VectorVest stop price. So if you put the VectorVest stop price on that graph, I can demonstrate the reason I want to avoid that. It's already on the parameters list. See how overextended you are from the price? And when you get that overextended, it tends to revert back to the mean. Okay, so that's a couple bonus items there. But my next move here really would be to look at these guys on a longer time frame. Let's back out to a 5-year graph. Oh, that's a very different perspective on ExxonMobil than what I was seeing on the 1-year chart. So we want to look at multiple time frames. In particular, on investments, you want to look at the longer time frame. Now, the oil patch in particular, right, suffered through the COVID collapse because demand just dried up. So I'm not expecting to see all these stocks just steadily plodding higher for the last 5 years. But let's scroll. One of the things I noticed on COPD was, first of all, it has a much more persistent price. It was nowhere near as volatile as, the swings were not as big as ExxonMobil. But you notice how the EPS in the pullback stayed positive? So even in the COVID collapse, the company still stayed profitable. Whereas flip back to ExxonMobil, right? Not so much. So scrolling through those, then I get this 5-year perspective. And so you're starting to say, I'm kind of whittling it down to the best candidates out of this offering. And then finally, who's at the best entry? If I go back into something like a 3-month look, when it comes time to where's my entry point? Well, MTDR is right at resistance. So that one got culled from my list. And COP was my other favorite. So COP is the winner.
But
Right.
DVN doesn't look so bad, correct?
Well, but on the 5-year look, I like the COP graph better.
I got you. Okay.
So I short-circuited that a little bit, right? But if you take this in a progressive, you look at the 1-year chart first, eliminate those that you didn't like. Then go to the 5-year graph, eliminate anybody who's approaching like a 5-year resistance, or for instance, in this case, actually lost money in that time frame. Then of those candidates that are left, I can look in the short term to find the best entry. And so that falls right back to more of a trader's approach of, hey, I'm trying to buy stocks that are currently in trend and are hitting higher highs. So my entry then can be, if I go an eighth of a point or an interval higher than yesterday's high, that uptrend is continuing, I can enter. And when? Well, when I have a green light in the price column of the color guard. So the market timing signal is saying, yes, the market is rising. It's okay to be buying stocks. Then the question of, well, which stocks do I want to buy comes down to the analysis that we just did. Pick your entry point. And by the way, my initial stop loss, if I was buying XOM today, my initial stop loss is at $63.82, the current value of the VectorVest stop price. Look how much room that gives the stock to move, even though I recognize it's overextended, right? But in terms of its average move leading into that, maybe go to 6 months, Glenn. I'm giving this stock room to pull back against me. When you're in a methodology that buys the higher high, one of the resistance points we get with folks is, well, I don't want to buy that stock. It's at a new high. It's due to pull back. Well, I'm anticipating in normal price action that the stock, I call it ebb and flow, right? The stock advances, it pulls back to a higher low, and then advances to the next higher high. So I anticipate if I buy in the middle of an uptrend that, I'm going to have a pullback probably in 2 or 3 bars. I'm expecting it because that's what's normal. The thing I want to avoid is that pullback being an outsized move that collapses beyond the VectorVest stop price. So I now know my exit point. I know how much money I'm risking per share, the current price versus my exit point. Now I can correctly size the position so that if it does turn on me, I don't lose more than 1 to 2% of my portfolio value on the trade. I live to fight another day. If I have, if I've lost 1% of my portfolio, my theoretical 100 grand is now 99. I can do that, right? So that's a sustainable methodology. It's putting probabilities on our side. More winning trades than losing trades. The winners outpace the losers. And I'm on the right side of the market trend. I'm putting the probabilities in my side, and I've managed my risk. Those core principles are universal across all those time frames. So the Successful Investor course is all about teaching you how to do that, what that really means on a brass tacks kind of as I say, cellular level, but down in the minutia of, okay, how would I actually enter that order with my brokerage kind of thing? Right, but that's the Successful Investor approach to some great stocks. And XLM could be a great swing trade, could be a great day trade. right? It doesn't invalidate anything. It just takes a particular perspective, and the trading system rules that I'm going to apply have to be working in concert with that perspective and those objectives. Whew.
All right, dude. Thank you for that. I appreciate it.
So I should tell people, because we're about to start the course again, if you're interested in joining us for this course, which is starting next week. I see your lips moving, but I can't hear you, Glenn.
Yeah, don't. You're listening to us from the YouTube channel, not from Teams, so it's a little different. You just keep on talking.
All right. Well, if you would, the course is on, if you go to vectorvest.com/TSIC, maybe just bring up that page. And then folks can see the address in the toolbar. If you want to join us for the course, that's the place to get more information about the course. You could also link through the VectorVest views if that's easier for you, and just follow the links to sign up. We'd love to see you there and see if we can't help you be more successful in the markets from that very prudent perspective.
All right. Again, I was glad to have him on for that perspective. I think that you guys out there in YouTube land need to know that we do more than just what you see here on YouTube. There's a lot behind the scenes. We've got a lot of different courses. We've got a lot of different coachings that you can take advantage of. And I wanted Todd to take you through a practical view of what he teaches in that course. The way, and you can do that analysis on any stock that you want, on any stock. And it gives you a better, and you know, it says right there, become a confident, successful investor. And that's the course. The course is the Successful Investor course. 6 weeks. It takes you through a lot of what Todd just did, but on a deeper level. So with that, I'll give you hand claps again. Thank you very much for being here, Todd. And, you know, anytime you got something going on, you want to come on to see VV Nation on YouTube, by all means, please, please, please come on.
Well, thanks, Glenn. I appreciate the chance to share. So have a great one.
You too, dude. Thank you. All right. So now let's go on. We're going to go on to my next story. And I think that some of these stories, one of them specifically in the Metaverse stocks, I think we're going to talk a little bit about it today, but I'm going to do the majority of video on it tomorrow. That's going to be the 6 p.m. video going out for the weekend. All right, so I'm putting that out there that way. All right, let's go to my next story. And the story that we just did was on ConocoPhillips versus Exxon. I think Todd set down a great argument that ConocoPhillips were the better stock over the two of them. All right, so from here, let's go to my next story. We did that one already. My next one. Now, this is in an industry that's called the aerospace and defense stocks. That sector is not the industries. That sector is up over 15% over the last 2 weeks. So again, Trending Thursday is all about what stuff is trending, preferably sectors. Sectors give me a wider view of what's going on, and I look at the stocks in that sector. So interesting, especially in Boeing. Boeing had a couple of stories come out. So Air is one of them, solid growth stock, 3 reasons to think, yes, we're going to analyze that. But Boeing is on the rise again. Is Boeing stock a buy as China reportedly takes another step in returning the 737 MAX to service? That's big for Boeing. And the other side is that I saw another story that Allegiant is picking up 50 737 MAXs. So all of the debacle that they had over the 737 MAXs may be coming to an end, and people may be jumping back on board. That's a big plane for them. That's a big contract for them. So that's two things that could help push Boeing higher. But there's also other stocks that AIR was in that space, and I've got a couple of other stocks. I always like the aerospace and defense sector because of military contracts. Military contracts can bolster these companies at a drop of a dime. And you know what? No matter what happens, with the exception of Boeing, with all of the negative press on the 737 MAX, you got your Northrop Grumman's. They're always in the mix. They're always making money. They're always growing their companies because they've got their hands in a lot of military stuff. So I always keep my eyes out on that space. So let's go look at the stocks that I have in there. I'm going to close that out. Let's go find it. Let's go to the viewers tab. And my stocks in the aerospace are going to be AIR, which was the story that I had on. TGI, where's that at? That's down here. Triumph, Northrop Grumman, which is NOC. All right. I'm also got ESLT, and then I've got Boeing. Now, Boeing is at the bottom of the list because, again, towards the bottom of the list because it's been hit so hard because of the 737s, MAXes. But they could be coming back, and it could be something to keep your eyes on. So I'm going to start off with the 3-year. I'm going to change my graph layouts. I love the layout that Todd talked about today, but I've got a layout. GETJR swing. There's my 20-day exponential moving average. I'm also going to start looking at the stop price because everybody needs to know when I talk about a stock, when to get out of a stock. All right. Our stop price is a 13-week moving average adjusted for the fundamentals of the stock. Gives a good quality stock more room to go down. Look at AAR or AIR, Aerospace and Defense. Look at this. Bouncing off support above the 20-day, moving nicely. The stop price is moving along with it. Look at the earnings. Look at the earnings growth. I like it in that space of aerospace and defense. All right. What else is in here? Now, TGI looks like it's moving up now, but I like the play of AIR because it's hitting a new 3-month high. Now, this is coming off a level of support nicely above the 20-day exponential moving average. Just recently broke through 2 levels of resistance. Still moving up. A little bit of a down day today. Earnings per share, earnings growth rate, both growing, but still I like AIR. Now Northrop. Now Northrop Grumman is a well-known company above the 20-day, retracing from a level of resistance. What I don't like about Northrop Grumman, earnings per share is falling, earnings growth is falling. These are 2 red flags that even though it's in a sector that's moving, red flags in regards to this stock. Why? Because earnings is the engine that drives the stock's price higher. Earnings are falling on this stock. And I know it's forecasted earnings, but they're falling. That is a red flag in regards to this. Now, if the industry or the sector is rising, that could pull the stock's price higher. But making a better informed decision tells me to be careful with this stock. All right, what else is in here? There's ESLT. I like this. Recently coming off a 3-month high, staying above that 20-day exponential moving average, staying above the stop price. Boeing is up 12% since first of the year. I know. And again, Lee, I think it's a lot to do with the contract with Allegiant to buy some of their planes and the China story that I just showed. All right, and the China story that I just showed. All right, but ESLT, not bad. Right at that level of resistance above the 20-day exponential moving average, rising earnings and earnings growth. And then here's Boeing. Boeing is starting to move. I like that it recently went through 2 levels of resistance, moving up. I've got 2 more levels of resistance. Could this be an early move? I think with the news behind it, it's got potential. But if I'm looking at it right now, it's above the 20-day, above my stop. Good volume today. Earnings per share maybe falling off a little bit, but still higher than it was 3 months ago. And look at that earnings growth. Tomorrow is going to be insane. I keep hearing about BBIG. Listen, when I go to look at BBIG, if it looks like crap, I'm going to tell you about it. You may be on the short squeeze list, but I got a tool right here that makes it so that you don't get caught up in all the hype. Think about that, folks. Meme stocks, hype. Think about that. I can take the hype out and give you better insight, better information. It could be all of that stuff. but is it the right time for you to be in it? Just think about it. Steve says, technically, I like BA of all mentioned so far, and that's fine. But when I've got a couple of these stocks that look like that, I can't displace that. That's moving bottom left, top right. When I look at Boeing, though, Boeing's got a lot more volatility going on. But if the sector is about to move, this is one of the more beaten up stocks in the sector. It could have some great upside. It could have some upside. Lockheed Martin wasn't one of the, it could have been one up there, Tony, but I didn't put that up there. I could have put all the stocks up there. I'd never be done, Tony. But Lockheed Martin, I could do the same thing. LMT, putting it on the 3-month graph. I like the move. Look at the steady move after the gap down. End of day, fading that downward gap. I like it. I do like it. I don't like the earnings and the earnings growth rate, though, Tony. That's sort of like the Northrop Grumman one, right? I'd rather, and Todd talked about this, I want to be in stocks that are rising with rising earnings and rising earnings growth rate. So, yeah, I like the price action, but these are the red flags that tell me to be careful. Does that make sense, Tony? I quit Northrop when I saw a letter from the U.S. Army giving them 30 days to explain why all their contracts should not be canceled. That's a whole nother story. I don't know anything about that story, Roger. But, Tony, does that answer your question about LMT? All right, hopefully it does. All right, let's get into my next story. Where's my stories? Let's get to my next story. Talking about the Metaverse. Apple's Metaverse prospects produce real optimism for investors. In my Metaverse watch list, Apple is a really good one for payments. All right, I'll talk a little bit about that in a second. This is something that I'm looking into. Virtual land in the Metaverse. So I'm looking into that one as well. So tell you what I'm going to do. In regards to the Metaverse stocks, I had stocks in here that I was going to do today. Instead of doing them today, for all you that are out there, I'm going to go to my watch list viewer. For those of you who are interested in Metaverse stocks, I've got a list right here. You guys should have it. It says Metaverse. I'm going to show you tomorrow's video on how to have a diverse Metaverse portfolio. All right? Because I'm looking at ETFs. I've got these Metaverse stocks separated by ETFs, gaming and communications, hardware, infrastructure, marketing and advertising, payments and commerce, and security. So tomorrow, my video will be on trying to take the best out of all of these to make a diversified Metaverse portfolio. All right, so that's what I'm going to do for Metaverse stocks, and it's going to be for tomorrow's video. All right, now my next stories are going to be on my stocks of interest. There you go. Arsa says BBIG does not look good if you believe in VectorVest analysis. Thus the reason the people who are talking about it as a short squeeze and all of that stuff, that's fine. You can do that. All right. And even if it's a short squeeze, what happens with that? If you do jump on board, one of two things is going to happen. It's going to do really good for a real short amount of time, or it's going to be a bust. Now, if you believe and you've done your homework on BBIG, that's important. Not that I've got people in the room telling you that it's going to go up. Not that. Do some homework behind it, folks. Look at why you think it's going to go up. If it's all about a big short squeeze, and that's another whole thing. It's got no technicals, that's all news driven. And if you're okay with that, I'm not going to tell you not to jump on board with it. Not at all. But do your homework. Do your homework. That's what I want you guys to do. And if the VectorVest system says it's not something that you want to take advantage of, that's up to you. That's totally up to you. I know. And Craig is right. Everyone wants the stocks tips and not to do their homework. If I like that Arson looked at it and said, if you're believing VectorVest that it's not good analysis, there's a difference between data. Hey, the stock's going to go up tomorrow. Yeah, that's great. And information. Whether it's VectorVest or whoever's tool you're using, what does your tool tell you about it? All right. I didn't have XROF in here as stocks of interest, but here's the stocks I got. Energy. United cuts flights as about 3,000 workers call out sick from COVID. That stock is going to feel the effects. This is interesting. Bank of America to reward employees with higher bonuses. That's good, especially with the inflation. I like that. Infosys. Stock climbs after tech service firm raises revenue outlook. So that was an earnings story. Here's a bio. Cassava, an attractive value proposition. And then I went out and looked at Biopharma Catalyst, a great website. They've got two stocks, or one drug, not two drugs, but one drug for for Alzheimer's disease that's in phase 3. Keep your eye on this drug. Keep your eyes. This is Cassava. This is a stock to keep your eyes on. This is a stock to keep your eyes on. This is world's largest for agriculture. This is, what's the word I'm looking for? Fertilizer. All right, think about it. We got to grow food. And fertilizer companies are out there for that reason. All right, this is a stock that's caught my mind, caught my attention as well. So let's go take a look at these. These are my stocks of interest. And no, XROF wasn't on my list today. It wasn't on my list. So let's go take a look at my stocks of interest. United Airlines, I wonder where that is. Yeah, towards the bottom of the list. Bank of America, remember, banks are reporting tomorrow. Infosys, where's that at? INFY, there it is, towards the middle of the list. Sava, which is my drug company, last stock in the list. Remember, it's got a drug in phase 3, something to keep your eye on. And Mosaic for the whole idea of fertilizers. Where is MOS? There it is, towards the middle of the list. Let's go take a look at these stocks, view the stock graphs, put them on a 3-month graph. Let's take a look. So United Airlines, companies, pilots in them are calling out, but look at the stock. Look at this stock trying to rise up. Is this space starting to pick up? Well, the price action tells me that. The earnings and the earnings growth rate tells me that. Good volume. Keep your eye on it. All right. I think that if you play it, play the price action. There's the stop price. It did recently break through 2 levels of resistance. One here, moving up slowly but surely. Something to keep your eye on. Next one, Bank of America, giving higher bonuses. I do like that it's higher than it was 3 months ago. Consolidating, look at the earnings per share and the earnings growth. Next one, Info. This is a computer services stock. Earnings look good. Earnings growth doesn't look nearly as good. Bouncing around a little bit more volatility in the movement of this stock. And Sava. This is going to be a drug company. This is strictly a speculative play, but it's got a drug in phase 3. And normally after stocks, if they get past phase 3 and get the FDA approval, you'll see these stocks blow up terribly to the upside. So this may not be a bad play. Fundamentally, I don't think this stock is all that good, but this is news driven based on the whole idea of phase 3 drug. And Mosaic, in regards to fertilizer, look at that. Nicely moving, approaching a 3-month high above the 20-day exponential moving average, breaking through a couple of levels of resistance. Nice volume. Earnings and earnings growth look good. All right. So those are all my stories. Again, I was going to do a deeper story on Metaverse stocks. I think I'm going to do it more so tomorrow. All right. What I will do today, and I'll do this real quick. Where's my watch list? Didn't I have a watch list for this? I think I did. Hit list. I forgot what it was. Trending. Weekly watch list. There it is. All right. Let's go look at some of your stocks. We'll do that today. Everybody wants to look, not everybody, but a lot of you want to look at this BBIG because of the short squeeze. All right. We'll take a look at it. All right, short squeeze, folks. Don't mean that it's a good play just because it's a short squeeze. You know what else I'm going to look at? And I'm trading these, AMC and GME. I'm trading both of these. MV, MDF, comma. I don't have that, unfortunately. GD, that's not a good thing to say. Oh, yeah. GD, comma, JXN, comma, UEC, that is a stock for uranium, FNGD, comma, when and what is on tomorrow. Banks are reporting tomorrow, TTWO, DocuSign, DOCU, comma, Marvel, I like Marvel, comma, ASML, comma, is that Neiman Marcus? What's NEM? No, Newmont. That's a gold company, isn't it? Going once, going twice, 3 times sold. XROF. That's it. Those are my stocks I'm looking at for today. All right, let's take a look at them real quick. Biggest thing is that these are sorted by VST. The Jackson Financials at the top of the list with a VST at 1.4. XRO, GameStop, AMC, BBIG. Oh, look at that. All of the big short squeeze stocks are where, folks? All at the bottom. What are they? Sell recommendations. Okay? I'm just putting that out there. I'm not beating you up. I'm just putting them out there. All right, I'm going to put up two more. FITB, Fifth Third Bank, FITB, and I will put up DBD. Energy, I'm keeping it real, baby. I'm keeping it straight real. And everybody in here knows that that's what you got a tool for, like VectorVest. I'm just keeping it straight real. Fifth Third is now up there. DBD, Diebold is up there as well. All right, let's go take a look at these. Let's graph them all. Let's go put these all on a 3-month graph. Let's go check them out. All right. How many likes do we get?
92.
92. Let's see if we can get 100 likes before we're done. I have my good friend Todd. Huh?
That seems fair.
That seems fair. All right. I like JXN. Bottom left, top right. Look at the stock's price right now. If you own it, a couple of reasons why I would not get rid of it. Look at the earnings. Look at the earnings growth. Look at where the stock is compared to that 20-day exponential moving average. It hasn't fallen below it. If you want a solid line in the sand, there's the VectorVest stop price to get you out. And I've got a level of support sitting at 36.49. I wouldn't want you to give this all back. So if you've got a stop and it's triggering somewhere up in here, don't be afraid to take that off the table or take half off the table and lock in some profits. But I do like Jackson. I do like Fifth Third. I don't like the earnings growth on Fifth Third, but I like the earnings. The volume is pretty good. Nicely above the 20-day. Broke through a couple of levels of resistance. Still running high. Watch these big wicks at the top of these candles. I got a little bit of selling pressure on the stock. This is telling me that right now. Don't be afraid to take some of this off the table if you need to. I like that they're moving up, but I don't like the wicks. That's a lot of selling pressure. Keep that in mind. Next stock is ASML. I'm not feeling that. The stock is trending down. That's straight up trending down over the last 3 months pretty much. That's straight up trending down. There's nothing. Now, the earnings per share looks good. The earnings growth does not look good, but the stock is trending lower. Big down day today. Broke through 2 levels of support. That's given more confirmation to the stock's price moving down on top of the trend line moving down. I'm not feeling that right now. Diebold, excuse me, I like the earnings. I'm not feeling the earnings growth. The stock is clearly above the 20-day, breaking through a couple of levels of resistance here, approaching another level of resistance, sitting here at the price of 1089. Watch that. I'd like to see it break through the 3-month high to show more confirmation of uptrend. But currently the stock is trending higher. Earnings per share is pulling back, but still higher than it was 3 months ago. Earnings growth doesn't look too good. All right. Relative value is above 1. The relative safety is below 1. The stock is more of an aggressive play. All right. Marvel. Marvel looked good, and now not so much. Look at that pullback below the 20-day. Earnings good. Earnings growth rate looks good, but price action is pulling off of that. Look at that from the high. I've got lower highs. This is definitely showing me a downward trend on the stock. If you own it, folks, you got to make a decision when enough is enough. The stock is trending lower and now currently below the 20 exponential moving average and falling, and getting nicely close to that the VectorVest stop price. How do I get in with your tools? Stephanie, if you go to www.vectorvest.com/YT for YouTube, you can take advantage of a 30-day trial to this software for 99 cents. For 99 cents. All right? www.vectorvest.com/YT. Thank you. All right. Next stock. Take Two. Pulled back on it. Was that an earnings call? No, it wasn't earnings. Stock, something happened. Stock fell hard enough that it fell through our stop price. Gave you a sell recommendation. When are you presenting the Metaverse tomorrow? It'll be released at 6 p.m. It will be released at 6 p.m. All right, at 6 p.m. I did like the bounce, but look at today's activity. We started to fade the end of day gap. Today is a down day. I do like the earnings. I don't like the earnings. I don't like the earnings growth. I'm not going to pick up that stock, Raj. I'm sorry, my friend. I want to look at these because I got to go. I got to make the video for tomorrow. General Dynamics, also in the aerospace and defense, rising earnings. And the earnings growth is on par with where it was 3 months ago. Nicely above the 20-day, leveling out, a little bit of consolidation right now, nicely above our stop price. I'm telling you, this whole space is something to keep your eyes on. I like this space. I always like this space. I can always find good stocks. They did buy, should that have zapped it? That's right, they did buy Zynga. I talked about that on Midday Market on Monday. That was the big news on Mondays, that they bought Zynga. All right, so there you go. Thank you for that, Digify. I can't say that. What is that? Digify? Digify. That's right. I talked about that on Midday Market on Monday, and I do like the rebound, but today's a down day. It started fading that gap. Thank you for that very much. That was the news, Aquaman Love. That was the news on Take Two, is that they bought Zynga. All right. Let's go Fang stocks short. A lot of volatility going on with this, isn't it? Today's activity big enough that it got back above my 20-day, but still sitting in a channel. That volume looks like poop. Did they just not do a reverse? Did they split? Hold on. There's the split. I thought it split. What does the split tell me? They did a split. I'm like looking at that. 1 for 20. Good, googly muggly, but look at the stock's price sitting in sideways. All right, there you go. 1 for 20. Whew. All right, but still moving sideways. It made it more affordable, didn't it? Probably did. For every one, we give you 20 stocks. That's what you call diverse. That's what you call. What's the word I'm looking for? Not diversification. What's the word I'm looking for? There's not overpaid. There you guys know the word I'm looking for. I know it. You'll say it. Dang it. I hate getting old and I can't remember my words. Joey, stop laughing because I know you are. Anyway, somebody will say it. Not safety. No. What's the word when you flush out all your stocks? You know what the word I'm looking for. Anyway, Newmont Mounting. I am not a fan of gold and silver. I still haven't been, not yet. Not dollar cost averaging is the word I'm looking for. Dilution. That's the word I was looking for. Nope, dilution. All right. Whew. All right, that's what'd you for? That was the word I'm looking for. Yeah, I know. That smoke was hot. I'm not a big fan of the gold and silver. Look at the earnings per share falling, earnings growth falling, stocks prices moving up. Short term, I might say yes. Fundamentally not sound. RT tells me that it's moving up short term. I could stay. It's above the 20-day, but I'm looking at the red flags here. If I'm going to take anything in the mining space, it's going to be short term. DocuSign. Wow. Gap down. That was on earnings, right? Gap down, stayed down, still below the 20-day exponential moving average, still below our stop price. I'm not feeling DocuSign just quite yet. I need the stock to bounce off this level of support, break through, start to fade this gap, and get above that 20-day exponential moving average. UEC, remember when uranium was on fire? It's not on fire anymore. Uranium is not on fire. Not on fire. No, Joey didn't like it. It's currently below the 20-day exponential moving average, sitting in its sideways channel. Earnings is falling. Earnings growth is starting to fall off a little bit. Be careful with the uranium space right now. All right? Be careful with the uranium space right now. Now, here's the news. BBIG, nice jump up above the 20-day exponential moving average. So from the perspective of technical trading, that may not be a bad play right now. Why? Because it's above the 20-day. It went above the stop price. Big volume. Long term, I don't like it. Short term, it may not be a bad play. Short term, it may not be a bad play. I like, from a technical standpoint, what's going on. As a matter of fact, let's go to graph layouts. Let's go to GETR trade. Now I'm looking at the 3 and the 8 coming off a level of support. Folks, that may not, I'm going to write that down. That may not be a bad play for you right now. All right. Now, it may be news driven. You might want to take your money as you can take it, but look at the volume behind it. RT is almost above 1. RT is almost above 1. That's rising volume behind the move. So everyone who's talking about, yeah, it's going to rock and roll. Listen, there may be, from a technical perspective, something to consider there. Something to consider. Yep, I'm with you on that, Ebert. Not a long-term trade. I'll take that. If it runs, very little wick at the top, it could have some, it's garnering some interest. All right, I agree with that, B Diesel. We may have to. All right, let's go to the next one. AMC, I own it, and it looks like poop. And it's sitting right at a level of a low of 2080. Look at that. Right there at a level of support on a 3-month level. I own it. I own it. If I'm going to look at anything that's meme-ish, that one doesn't look bad. That one still looks bad, and that's GME. It's still, that BBIG, still, if you take advantage of it, is a short-term trade. And there's XRO. I own XRO, GME, and AMC, and all of them are going down. All righty then. Uranium is probably best not to be on fire. Sounds dangerous. And you know, the biggest thing what's moving uranium stocks still is all of these, what am I looking for, Joey? Nuclear power plants that are going up all over the world. That's what's driving uranium. All right. And I'll wait. I am energy. I'm in XROF. I own it. I own it. I own it. I own AMC and I own GME. I'm thinking about I might throw on some BBIG. Looking at that graph, it could be setting up from a technical side. Sorry I had to leave for a few. If you covered mine, sorry about that. Adam, which was yours? Which was yours? Which was yours? And I'll tell you if it was. If I covered it. I just don't know which one it was. All right, I'm getting ready to go. Joey told me, somebody did something? What happened?
Subscribe to the channel.
I got a subscriber to the channel. Woo! Thank you for that. If you haven't already, please hit the subscribe button. Would love for you to do that, especially if you like the content. We do this every Thursday at 2 o'clock. Hit the subscribe button. Hit the bell icon. Did we get over 100 likes?
106.
There we go. That's what I'm talking about. CVE, Adam. I don't think I put up CVE. That's you? All right. I don't think I put up CVE. Tell you what I'm going to do. I got to go. But there it is. Let's go look at it. There's CVE. 3-month graph. 3 and the 8. I like it. I would trade it right now. RV, good upside. This is a good fundamentally sound stock. This has got good RV, good RS, good. This is a good freaking stock. It's a down day today. I wouldn't worry about it. Recently broke through resistance. I like it. There's nothing that I don't like about the stock. I like this stock. This is a good stock. No, Adam, I got you. There it is. There's your stock. All right. Good stock right there. And all right, now I'm done. Thank you guys for being here for Trending Thursday. Tomorrow, the 6 p.m. video will be on Metaverse stocks. I'm going to show you how to have a diversified Metaverse portfolio or portion of your portfolio encompassing all of the Metaverse stocks, and a great way to level this all out so that you're not stuck all in one thing. All right. Again, if you haven't hit the subscribe button, please do so. Hit the bell icon. And BBIG may not be a bad play. It's a tech play. It is a speculative play. It's a short-term play, but I'm watching the big bump up on the 3 and the 8 on volume, and it may not be a bad short-term play, but I looked at AMC, GME, and XROF. Right now, I wouldn't be jumping through hoops for those. All right, so there we go. With that, folks, adios, arrivederci, ciao, au revoir, sayonara, aloha to all my peeps in Hawaii. Bom dia. Shalom, namaste, yasu. Until next time, folks, see ya.